season, duck season, rabbit fever, duck season, rabbit fever, rabbit season, duck season, rabbit season. I say it's duck season, and I say fire.
Good morning. This is Porkchop Penny. How y'all doing today, babies? Glorious day to be alive. Well, maybe not so glorious. It just depends on your perspective. All right. You know, I'm just like y'all. I have my down days. I'm been there praying for people and trying to stand up for things I believe in. It's tough. But anyway, let's get in on, since the SPY is not ready, it's still cooking. So there's no real good updates. There's really not much going on. It's just computers playing. Now, today I'd like to talk about one of my favorite subjects is alpha beta. Why is that important? Because, babies, here's something nobody really understands. Well, I shouldn't say nobody. There's a lot of them fellers who understand how the market works. But what I'd like to talk about from a perspective is how does a day trader or a short-term swing trader think about alpha beta, and how can they understand that and putting that in context, put that in the right pipe, and be able to smoke it correctly. All right? That's how I'd talk about it. Look at this all these computers up here running this little program. You see how this caught, how our system caught the old knowing where everybody's looking and how they're looking at the market in different ways. Pulling it all together, start explaining how wave theory works and how it all works together. And you can't have one thing. What we're doing is we're looking for, my trading system is seeking the Einstein way of thinking. We want to find a unified theory of trading that just doesn't work sometimes. Because we don't want to, what we want to do is all of us really want to understand the market. That's how we can borrow something from it and then understand it better, so we don't allow it to take something from us. Okay, let me talk about time frame. Time frame is important, baby, because if you're going to trade on a time frame, you stay on that time frame. You learn that stock or that system. The reason I love the SPY is not because I necessarily trades the SPY. Now, I use the SPY because I want to know what other stocks are going to be facing in headwinds. And the SPY or the SPX or whatever you want to call it, baby, you can look at it and use it as your tool to seeing where the market is. So if you want to trade one stock like Apple or whatever, Apple is one of the biggest leading indicators that add to the story of the SPY. Why? Because all these are built off all the sectors, and it's a conglomeration, etc., yada yada. I don't pretend to know. You don't already know this, my friends, but this is for the youngins or even us oldens who don't know. Now, here's the unique thing that I have taken into account in my trading and my trading style. I use the Fibonacci. And you'd be asking, okay, yeah, nothing special about that. People use the Fibonacci. Then you see these people use the Fibonacci in this way. And then you see very people look at only Fibonacci that way. Well, I have constructed my trading system based upon everything from the beta weighting, which is really important, to the alpha of them stocks. And let's just talk about that a little bit here. Let's get on into this and talk about it as quick as I can and make this a teaching moment. All right, my system works with all betas and all alphas. Why is that? Well, first thing we want to do is we want to take into account what the heck are they talking about when they're talking about alpha beta this and alpha beta that. All right, well, let's just figure that on out. Get back in here and look at these here. All right, let me turn this on. Nice little description of what these key, how does they say it? Key takeaways. Both alpha and beta take those historical measures of performance and they benchmark against the S&P. Well, and beta indicates the volatility stock price has been in comparison to the market as a whole. A high alpha is always good. A high beta may be preferred by a long-term investor. Why is that important? Well, my stock moves less. It moves in a constant direction, very regulated. Think of it as having more shock absorber, or I don't know how else to explain it. Anyway, it doesn't necessarily returns the best profits to yield ratio, but what you can take from that is, for instance, I got a retirement account that I just love, QYLD. That is a mostly stock that mostly is just about returning about 10 or 12% of your interest a year. That's pretty incredible, but it could be incredibly taxing trying to trade it in and out and stay within it. Goes up but it has a pretty high doggone beta. It don't move a whole but $1 or $2. I could hold 1,000 shares of that, and I could withstand $2-3. And that thing don't move very much, but what it does is it changes the way income paid out to it and the taxes on it. It is not necessarily a good trade for any short-term traders. It is retirement people that it's going to serve the best, especially in a non-tax type of account. So I use that as my long-term investing. I don't put my money in growth stocks no more. I'm an old man. I don't have 20 years to start thinking about where I take my profit. Now, what's important about this, though, to a trader or day trader is understanding alpha has an effect. How many dollars I put into it, basically how quickly that has the volatility that it will pay me a decent return on what's invested. Well, day traders don't really think about that a whole lot, and neither do swing traders. But here's the thing. We want to see more alpha. But the beta affects it. So we can get invested. We can stay, in that stock up to 2-3 weeks at the most if we're swing trading. Well, we want that stock to move. We don't want to be meandering on like a lazy person. So what we have to do, no matter what stock, technically, we need to be figuring that out. But here's the thing. With the Fibonacci, if you use Fibonacci and you figure out which time frame can move in a proper amount of beta, you can estimate how long it takes that stock to meet your profit potential. And if it takes too long, you don't want to trade it. You don't want to trade it. No, baby. Anyway, quickly, let's go over yesterday. Let me show you the skew on the market measured in daily. And this is what you typically see when you hit 161 or 100. You see how profit taking. Now, for that second leg, we're looking for them to break the 127 and dive down. But right now we're having a pullback because we have people I hit my target, got my money, that's what I'm going to do. This was yesterday. You can see not as many people believe in that old long leg down as they did the day before. But don't you worry. They is below. So as long as they stay above this 100% and they don't break any of these. Now here's the thing. I want you to see this. This is what people is working for. They're about ready to break through this channel. And what is the channel? Rule channel. The rule channel is always when we break out of a channel, we're going to have a new extreme, either high or low of that channel. The more important the channel. This is a daily channel. This channel is important. If we break this, see, they're starting to turn this momentum. They're turning it they got it going up, and then they're janking on the market. So guess where I'm pretty sure this is going to be a down leg. Now, let's get back to the important thing. Let's shut this doggone thing off. I love that. Anyway, look at also, you remember how I say this is neutral place? Well, that's a lower time frame. Why are time frames important? Because they give us perspective on the bigger picture. You know, it looks down on the hourly just iffy, but this is absolutely showing me that we've got a turnaround coming. We could have a breakout, but I ain't too worried about it. Here's a long term 50% level. Here's our essentially the 382 level. They have to break this to even start considering a turnaround in the market. Then they got to get over this 50, and they got to get over this one deviation. They got to get up in this channel. That's going to take a lot. Right now, all we got is computers grinding away, slowly pushing this up. Get them excited. Get them up in here. They want to get them up in here, and then they want to do a little cup and handle kind of looking thing. And look what we got going on here. We got a head and shoulders. That ain't going to really work. Anyway, what we have just a bunch of janking around. Anyway, so the SPY has 4 particular times that it likes to trade. It likes to trade the 15, or more basically, actually 21 minute. This would be the 21 minute. The 55, that's basically an hour. It trades the 233, which is a 2 hour, the 1 hour, 2 hour. That is the 4 time frames that has been verified on this. What's interesting, I have not got a verification on the what I use is the beta and the alpha to help me figure out which time frames are confirmed. What does that mean? It means the 4 best time frames that trade on this particular product, and this is conglomeration of the whole market, are variations. So I have to really be careful. I keep constantly checking that, and this has been constant over the last 2-3 years. The beta is starting to change a bit, but it still has not made much change. The beauty of Fibonacci is it expands as a tool and a time frame that's equivalent to Mr. Fibonacci's principles. And what it does, it don't care. I can go over and I can trade an hourly as long as it's verified. Pretty dang good. I can almost walk to any stock, and every stock has its own alpha and beta, so they trade differently. And that's why you need time really in a stock or a stonk, as you say. Anyway, to be trading it so you get to know its personality. And that's basically what you're discovering is the human eye figuring out, okay, this likes to trade this way. Okay, I could see this is going to react by the personality. Well, the personality basically is your alpha beta. But Mr. Fibonacci is something that stays constant all across every stonk, ETF, market. And you can discover its, and all you really need is 2 time frames. Remember, 2 important things about trading multiple time frames that helps you be a good trader. 2 important, you get 3 or 4 of them multiple of time frames that like to trade together. But how you do that is just pretty simple. You figure it out with Mr. Fibonacci, and he makes everybody equal. You understand? Well, if you don't understand, I'm sorry, because I know it's a bit, for some it ain't. It's too complicated. It really isn't. It really isn't. It looks complicated, but it's really not. Now, I am an engineer. I'm an IT engineer, retired IT engineer. So what I call simple, some people may not. Now, all my charts are built on the one hour, or this approximate 1 hour on the SPY. So you're going to see up here at this 2 hour, you see how my charts don't quite fit? They almost fit, but you're talking about this. This is essentially a 2-hour time frame, and the time is on this 233 minute is a derivation of Mr. Fibonacci. All right. So what do? I take out the volatility. This long term advises me over these other 3 time frames. This time frame is my general. This is the trading chart. This is my overwatch. My sub commanders telling me, okay, stuff is warming, la la la. And this here is my Mr. Trade. Okay, so, all right. So we start to look for the 1, 2, 3s. We see what the market is. The market making good structure? And once you understand what good structure is, no insults to anybody, but once you understand when it's working. But right here, this is the time frame I'm trading on, and here's what I'm seeing. All right, I'm seeing death, doom, and gloom on this time frame for the whole market. Right here, we have this. We'll come back and get a bounce here. So it looks to me like we're gonna have some bouncing going on. We're about midterm, and frankly, it looks good for the upside. We've got to have a pullback. We need a 1, 2, 3. And this is so right now, you see how short this leg is? It's not natural. What we're going to see is probably a turnaround. And then it'll be a question of, can we get back over that halfway, 50% back? Technically, this is below. What we should have saw is this come down to about here and had a very springy, nice, quick, sharp response within a fair amount of time with the 2 hour. Anyway, get back to my previous subject. So why is that important? Well, alpha and beta expands consistently with Mr. Fibonacci's principles. It's almost like a spring. If you trade in sequence, so this is 55 minute. These bars are sized by Mr. Fibonacci to give me very clear wave energy at that level and what the wave looks like. See, right down here. And this is a very nice level for producing really good charts. The 1 hour and the 32, well, actually the 55 minute and the 32 minute. Anyway, I hope y'all got something valuable out of this. And what we're trying to incorporate is a mechanism how to logically come up with consistent, effective information out of the market using every part of the system that works. And the problem is a lot of people, they figure they don't know what's constant. So the time frame you're trading on, if you figure out your right time frame, you pick it, you make all your charts on that time frame. I don't care if you have a bigger time frame that does not quite fit, you just ignore that. You use it as the big kahuna, showing you this takes all the volatility, helps you take the volatility mess when you're down here, and you get stereosonic vision where you get drawn in and everything is, oh my God, that world and that fake and that head fake and that yada yada yada, and you put those and you synchronize those together. 2 is all you need. I like 4. But sometimes I can't get a stock to give me 2. If that stock won't give me 2 good time frames that are down here that are tradable within, and let me tell you something, that 2 hours grid can tell you a whole lot about the future of that stock. You can still see there is a nice big old triangle that's going on here. You see this? This is what some of them traders, them people, they're picking up. They're saying, oh, I see it. I see it. Then here's the guys that are trading down on this little lower time frame. And they're starting to see this triangle. See this triangle? See, they're seeing that. And then these fellers down here, I want you to look here. This is I love this old jank here. Oh yeah, well we broke it, so we're looking for a new extreme. Well, that doesn't work if we're actually trading this. This was an interesting jank that's almost built into the system, and they know what they're doing. They're providing different pictures for different levels of traders. See, we got this little triangle here. You see where they're trading this? This little bitty triangle. See that? You can see it. I mean, it's dang near these people. So I can pretty much verify this is the 15-minute crowd. This is the 15. Some of them see this. They know that that's a breaking point. Anyway, with the market the way it is, I'm not really too worried about it. I'm gonna let it go up here and verify. I need to see a breaking of this channel and a pullback and stay above this channel for an hour. And I always have to be bouncing off something. We got to have some support. We can't be taking trades out in the middle. Anyway, love y'all. I hope this was helpful. Peace and love to all y'all. And anyway, I'll see you tomorrow. Pork chop penny out, babies.
Let's try that again. Okay, I'll start it this time. Right. Wabbit season. Duck season. Wabbit season. Wabbit season. Duck season. Fire!